What is going on, everybody? Welcome on into today's stream, Mixed Signals. That is the story I want to be diving into here in today's video. So if you're watching after the fact, we'll cover that in the beginning, and then we'll do a little bit of a live trading power hour. We're actually in one right now. I'm not really too worried. I locked about half of this one in, so I'm kind of letting it ride here. It's an IWM put trade. I'm on the new little layout I've been testing out here on the Webull platform, the options trading layout. We got on the left-hand side, it's the actual stock. So we have the stock trading. The right-hand side, the right chart, is the option. So it's the chart history of the option contract that I'm looking at or in. And I had like 12 of these guys at an average of 103. I just took some off at 150, so like a 50%er. Killer little day trade here, but I'm actually looking to see if we get some more. IWM has a gap to fill back down to like 196, a little bit below 196. So I'm thinking we could get down to there into the end of the day. Not going to get too greedy, but I do like this, honestly, even for an overnight, given that I've already locked in like half of it. So we'll see where we get to the close. If we do come down a bit lower, I'll probably lock some and then hold a small amount overnight. That's the plan. Just for this, it is expiring tomorrow, so it's just, a very short-term looking trade, nothing crazy. But I want to talk bigger picture here in this video, and that's the point. So hope everyone's doing well. Let's just start diving on into it. So if we take a step back, let me actually jump back over. We'll cover the Robin in a second. Markets, whatever. This is the big picture. Let's go to SPY. Here's the S&P 500 ETF. Here's where I think things are getting very interesting. And why I say that is because I think today's move kind of in the past couple of days honestly proves that. And what I mean by that is that the market's seemingly just looking so far ahead at this point. Yes, could we pull back, and will there be pullbacks? Yes. I just think the reality of going down to these lows is becoming less and less likely given what we've been seeing. Could there be a shock to the market at some point to change our minds? Yes, there obviously could be. But if we take a step back and look at this, here's what's happening. We still have, as we have made this nice ascent off these lows. By the way, it's like a 20% move. The S&P's come back like half. It's regained like half of what it was down. Up like, I think the NASDAQ was up like 30% off the lows. I mean, let's just take a look. Let's look at QQQ. What is QQQ up off of the lows that were set in mid-June to today's highs? Up about 22%. So I think it was the NASDAQ chart that was up 20%. S&P up like 15%, I believe, from when I checked yesterday. QQQ is red right now. IWM is green barely, and SPY is just gone flat. It was up a nice bit. Now it's flat. But despite, pulling back right now, you've had a ton of big money, a ton of people looking to short the market here on this entire move up. And I think a little bit of today was a little bit of a squeeze out, and now you're getting more of a cleaner backside trade here towards the end of the day. I think we could potentially fill the gap up on CPI, come back down to 412 pretty easily. It's only about an $8 move back down. And then we'll see what happens from there. I think we could definitely get down to 400 again. I think we can even go sub 400, but I think that these dip buys or these dips that we're going to see in the market are going to be heavily shorted by retail, and I think you're going to see that narrative really be heavily shorted across the big names, the big boards too, the big guys, the big players, big money. And so the concern that I have, I guess it's concern, but just thinking about this, right, is that even though we think the market probably should come down, reset valuations a little bit better, and with the Fed raising rates, it might make sense historically based on what we've been seeing in the past and throughout the past 100 years of these different cycles playing out, yeah, you might look to see more downside. But I think that if we get this pullback, right, and then we get a September CPI that also comes down, and dare we say it also comes in under expectations, of course, we'll cross that bridge when we get there, then the market, we'll see that as a good thing again, based on what we saw this time. So this is kind of where we're kind of getting that push and pull. But I think if we get a pullback here, I'm a pretty big fan of buying that. I have hedges on right now, but I'm a pretty big fan of buying substantial pullbacks from here. I don't know how much I really don't know if we're going to get as big of a pullback as many think. That's the only concern. So we'll see what happens. Let this play out. But I think if we start to get into this range again, a lot of people are going to be going in short. What happens if we hold up and start to bounce? We could be setting up, in my view, right here for a much, much bigger squeeze out than what we just saw the past couple of days or even the past move off the lows. You're going to get these bear market rallies. You're going to get these big moves off the lows. You know that. The question now becomes, does this hold? And do we come back, build a higher low and go? And along that route, what happens to sentiment? Where's big money playing? And guys, I can't tell you how. I'm not a big fan of, maybe I will be in the future, of using these option order or option flow services. But if you go and look, let's just take a look at one of these right now. I'm going to pull up Cheddar Flow. There's a bunch of them out there. I know you can look at, sorry, I spelled it wrong. Cheddar Flow, as I'm pretty sure. Yeah, here it is, 109,000 followers. Now, I've noticed they've kind of got a bias, to be honest. Whoever runs this page seemingly has a bearish bias. I could just tell you right now, just off the front. But what I'm seeing is, look at this. QQQ, $3.4 million put at a 300 strike. Guys, QQQ currently sits at 324. Obviously, $300, if we take a look at the chart, brings you back down to the 50 SMA. It's actually, strike price wise. But these big money option plays, honestly, I wouldn't worry too much about them, because realistically, if this put was bought today, let's just say with $3.5 million, and it depreciates 50% on a big down day in the market, they're going to probably take the profits and move on. They're not necessarily looking for this thing to come down that low. They're not going to hold it the whole way. Some may, but it's also out to October. So they give themselves a good amount of time, and then on that big flush, on a big down day, they'll probably take profits. That's generally how I've seen this kind of play out in terms of watching some of these services, also having some insight to people who pay for some of these and seeing that for the past couple of months and seeing what's going on. I don't want more data or more info to kind of start clogging my feeds up and stuff. So that's why I don't personally pay for it as of right now. Maybe it's useful in the future. I don't know. It's a tool. It's just like an indicator, just like, look at your support lines, looking like your trend lines. It's just, it helps. Does it have to hold up? No. So NASDAQ attempting to break out of this this wedge, sure, but also the wedge is kind of already, thrown off because it fell through the bottom of it, so I don't even really care about that wedge. Here's another one, out the money call on Oxy, which means that's essentially a bullish bet on oil expiring out into November, which we've already seen oil bouncing back a good bit today. We can look at that in a second too. Here's another $2.1 million out of the money put play for QQQ with a 260 strike. That's way, way down there. We scroll down further. ARC flow. Here's their flow from ARC. Just puts galore. Look, all these are puts. It's just hundreds of thousands of dollars in puts, actually more than that, millions of dollars in puts being bought, left and right today. I've been seeing this yesterday. This is what's crazy. So you think to yourself, okay, well, big money's always right? NVIDIA, big time put, just purchase here. You think big money's always right. And I think a lot of big money is positioning for a much bigger move to the downside. And we totally can get a pullback in the short term. The problem's going to be if we were to hold up on a dip buy or on a dip, if we start to hold up, then what? I think there's a big, big potential for a big squeeze out. This is not like tomorrow. This is talking, weeks to months down the road. Let's see where we end up. But there could be a big move or a big potential for squeeze out. A lot of people want to go short. A lot of people say we're going to go lower. And a lot of people are not buying this dip. So what happens when the Fed finally does pivot in a couple of months, or let's just say next year, but the market's going to front run that anyway, and we get a better signal for that, and let's say we get 2, 3, 4 inflation readings down, come this fall, come this winter, that's where you can start to see a much bigger, in my opinion, much bigger squeeze out, and a lot of money who's been sitting on the sidelines this whole time, right? Low volume, right? All of a sudden come flooding back in. Maybe that comes in higher. Maybe that comes in on a dip. We shall see. But that's what I've been noticing. That's what I'm just watching and thinking kind of as we finish up today. So let's jump back to the current trade that I'm in. So I'm curious what everyone's thoughts are. But shorting natural gas, yeah, killed it last. Killer. Yeah, we can look at that too. What happens if you got stuck with an RDBX shares? Asking for a friend. Coinbase. Here's the thing. Coinbase is kind of interesting. I had, of course, you guys probably saw on a couple days ago, I had Mara. Short shares. Got destroyed on that. But I ended up today switching up my approach, and I ended up getting puts. Nothing crazy, but I got Mara puts. I didn't buy them at the top. I bought them at some point around the open today. Somewhere in here is where I bought them. And I just like this it's gotten pretty excited. I do think Bitcoin could come back. I just think the market can come back in general. So I'm thinking we can get Mara to come back down to about $15-14, and then if we break below this trend line is where I'll look to see, if we can't break it, I'll just take the profits. If we do break below the trend line, or I'll cut the loss, whatever it is. If we do pull back that trend line, it should be up pretty nicely on the trade. I do think we could definitely come down like sub $13 and potentially go to 10. That would be a much better dip buy for Mara, I think, if we got that. But you kind of got the squeeze out here, the squeeze out move that we just saw today. Now it's kind of falling back off. So it seems like we should see downside based on today's movement price action based on the chart. But it seems funny because Coinbase too is a pretty big mover. It seems like they always get negative news in the after hours. But now look at Coinbase. It's about to fill its gap back down, opened up. Today's range was nuts on Coinbase, by the way. Coinbase is a wild stock. You want to play option on this thing? You're asking for just insane moves. The thing this morning in pre-market was up over $100. It's now come back to the bottom of the range, actually almost filled the entire gap down to like 82, 81 in just intraday. Boom. Like that's insane to me. But Bitcoin wise, let's see Bitcoin. Bitcoin's still over 24K. Nothing crazy on Bitcoin. It's nothing crazy. It hit up to just shy of 25K, got rejected up there this morning. Let me move back. Got rejected up towards that 25K this morning and then has come back since. Bigger picture on Bitcoin, I think it did try at least to break a higher. Yeah, it's trying to break out of this consolidation, this wedge. The concern is that we have maybe a fake out set up right here. So we'll see what happens. But if the market does have a substantial pull, my thought is that Bitcoin will see from some more significant weakness. We'll come to this trend line, and then the question will be at that trend line, does it bounce? And is this market pullback a short-term pullback, or is it more? And then that will be the question to see if we get a further downside move. And that's why I like the Mara short. It's somewhat of a speculation play, but it's also, if we see weakness, I think Bitcoin and those plays will have a bit more weakness in the tape inside of this market. Now, also on top of that, we have to look at the 10-year. Here's something to note too. The 10-year just hit a new high for the month of August. So since August, I'll kind of drop this in. Here's kind of our line that separates July and August. So to the right of this line, this squiggly line, is August. And the 10-year has now had a couple of highs, but today it just popped a new one. So it popped up to just about 2.9 a few minutes ago, actually. And hit a high of the day. Not that the 10-year is like a crazy mover, but it actually has been in the past couple of months. So the 10-year moves pretty fast. What do we know about this? This has been a great tailwind on the way down. It's been a great tailwind for stocks. But the past couple of weeks, guess what? Stocks have been ripping. The 10-year under the surface has been building higher lows. You can't deny that. It's been building higher lows. Even yesterday, built a higher low. And it bounced right back. So this is somewhat concerning for me. I'm actually a fan. I was somewhat thinking this is what was going to happen. I do want this a bit higher, and I want to buy some TLT, which I actually bought another one of this. So I bought some TLT. By the way, this is an absolute monster that we'll cover in a second. Let me go back to the swing trade layout. Where is it? Here's the TLT. So I have an average on this. These are January 20th of next year. So like 5 months out, whatever it is. 125 calls. Now TLT is at like under 115. So these are out of the monies. But I do anticipate that this will be a great play. I just want to see if I can get this lower. So what I'm looking at here is I think we can get this under 2, and I want to add heavier. So I have a current position of 2 of these guys at an average of 288. It's going for 225 right now. Yeah, obviously it's down. The point here, I wasn't as confident in the short-term movement of bonds and TLT as I feel like I have a better feel in the longer term movement. So I figured let's go out to January and then start to, as bond yields push back up, start to average in. TLT will come down. We'll start to average in on this trade and build out a bigger position. And there's a crap ton of option positions on the left-hand side of the screen. I'll cover that in Saturday's video. The whole thing is I have a lot of layers. So I started to layer Soxel and Labu in a lot of different strikes. Today, I obviously, should I have bought some of them today? I bought some calls out to February and March for those 2 names. I don't really care. I think big picture, they'll be higher than where they are now anyway by that time. Just my speculation on it. But I wanted to establish those positions, watch the contracts, and sometimes for me, having, a contract that I'm in, even though I'm technically down unrealized in the short term, is what it is. Watch how that contract trades and then start to strike or start to add into that contract on a pullback. I have some hedges anyway, so my portfolio actually, I think, is going up if we see downside in the market. And if we actually see further upside, I think I go down slightly, not as bad. I've been pretty much like flat for most of this week outside the Mara position, which took me down a bit. I've been pretty flat on the portfolio, so it's been hedged pretty well, I think, especially in a time where I really don't have a high conviction right now in terms of either way. I can see us keep squeezing out, right? But I also want to make sure I'm prepared for backside because we are in a seasonally weak period of time. August, September are 2 seasonally red months. And on top of that, we are pretty overextended. I think we can get a pullback. So that's kind of the thoughts. That's a big picture on that. But there's a TLT play. I'm looking, ideally, I'd want to get over $1,000 position into these. So, what does that mean? If it's a $2 cost basis, or if it's going for $2, I probably want to have at least 5 contracts of this guy at some point. I think we can get him for under 2. That's what I'm waiting on. I'm waiting for a sub 2 add, and then I'll be adding like 2 contracts sub 2, and then I'll probably have, an extra 1 or 2 that I'll leave in my back pocket to add if we do go a bit lower. And then I think I'll be in a good spot on the TLTs. That's kind of the plan. But it's out to January, so it's a bigger picture. It's not, a super short term. And the way bonds have been moving, they're freaking volatile as hell. So this could play out in the next 3 months, and then, we're 3 months prior to the expiration anyway. So I think that's enough time. You can go out to March if you want to, or even go further, but to be safer. But that's at least where I'm thinking on that guy. So a lot of stuff. TQQQ puts. That's what I got too. Those are for me. Let me just check on those. Where are my TQs? Here they are. Where are they? They're on the left-hand side. I had been buying these like last week, actually. I started buying these. And I bought, I think, 2 more this week. So I have an average of now 4. It's a decent position, but it's in the money. So I have TQQQ 40 puts. So the TQQQ is going for it's just under $36. So these 40 puts are now green for me, but I don't really necessarily care. It's more just a hedge play. But I will be proactive in taking these off. So on any big red days in the market, I'll take one off, take one off, take one off, take one off. And then eventually the plan for me is that as we go down, if we do continue to go down, right, let's just say we put in a short-term top right now, today on SPY. If we do continue to kind of go down from here and start to kind of push lower and lower and lower, then I have less and less conviction on us going lower and lower and lower. So I'm just going to have less and less and less in terms of hedges, hold more and more and more cash, and then funnel that into longer dated option positions or just shares. I think right now if in the next month or two, who knows how long a pullback lasts, if it even comes, if we even get it, we'll see. Crazier stuff's been happening. I think the opportunity, we've been seeing substantial strength, relative strength on IWM. Here's IWM's daily chart. Substantial. Look at this. I mean, IWM just today touched the 200 period moving average. It hasn't been there since December. Guys, this is actually December, January. IWM started to fall before the overall markets. I guess it had that final little squeeze out push right here, fake out move before we went down. But IWM has essentially been downtrending since November 15th. Since mid-November, it's been just downtrending, and it finally has it's touched the 200 today, and it's gotten rejected. It's going to be, I would imagine it's going to be a pretty strong area of resistance. I think this has been just an absolutely, almost a parabolic move up off these lows in a month and a half. IWM's up about 22%, similar to the NASDAQ. This needs a pullback, but I think this is where you're going to see, you're seeing a lot more strength here, and especially if the 10-year is what we see, bigger picture kind of pop back up and then they start to roll back over. I think IWM is going to outperform SPY on these bounce backs. We're going to see, but let's see. XBI today as well is down a good chunk. I actually added a Labu into the covered call portfolio. The premiums are just so juiced up on those. I love that. Did I buy it today in a stupid time? Probably, but I don't really care. It's not like a position that I care to necessarily, I'm going to be worried about. I'll look to maybe get one more 100 shares of that at some point in the future if we get a bigger dip. But I started doing that, and I'm looking to sell covered calls there. And the plan is to hold that for a while anyway, so I'm not really super concerned. This is going to be resistance though up here on XBI. So I like this as a pullback zone. I think we can get back to 85, even 80 could be good spots, and that's where I'll look to add into some of my longer dated March calls. March, I have 2. I started buying the 15 strike Labus, and I started buying the 10s. So Labu is currently trading like 11-ish. Labu is the 3X Biotech Bull ETF. It's at 11.33. So 15 is kind of like the add the money kind of, I don't want to say lottery ticket, but it's an option that will, on a pullback, will get destroyed really, really fast. And then that's the one that I want to probably buy a couple contracts of. They'll be cheaper. And then the 10s are the ones that you kind of just buy and then will hold. They should hold value a bit better, especially if they're in the money. They'll probably fall out of the money if we do drop a bit further, but I'm not super concerned about it in the short term. So it's just a lot. But let's jump back to this. I want to pull back up on the Webull. Option trading. Here's my option trading layout. What do we got? So these contracts right now on these IWM puts I got 7 left at an average of 103. They're going for 138 by 141 right now. I know this might be a tough layout to see, but on the right-hand side, let me get rid of myself so I can show you what I mean. So it's kind of slightly cut off by like an inch on my screen, but the right-hand side, you have your order book level 2 for the option position that's pulled up on this right screen. The left screen right here, left chart layout, is the actual stock I'm looking at. So I enter in the stock I want to look at over here. Then I'll go to the option chain. I'll pull up the option contract that I want to look at here. And then my order entry, which is like also slightly cut off, but it's like half there. It's right here. I'll enter that in, and that order entry is connected to the option widget or the option chart widget right here, which is the right chart. So I have that. So this is kind of easy to enter the options in. I could use a price ladder. I could use an active trade. I don't really care. I like to use them. I'm not like, scalping. So I kind of generally just enter the orders in here and it's fine. And then under that, I have time and sales of the option position. So all the trades going through on this option, I'll see come up down here. This is the layout that I thought would be really useful. I never really utilize it too much because I haven't really been day trading much of anything at all, but I figure for day trades it could be a really good layout. So we're testing it out a little bit today. I felt pretty good about it too with this IWM put position that I'm in. We're almost going to fill the gap back down. We actually pretty much did. We got down to 196.05, so we got pretty close but a few minutes ago. But I think I'm going to hold a couple of these contracts overnight anyway, just because I think we could see some further weakness tomorrow, especially with that 10-year that's rallying pretty hard. So that's the layout. It's kind of cool. I think it's pretty cool for what it is. I generally am always in this layout, the swing trade layout. So, charts, pretty much big chart and everything else I need to see on the right-hand side other than that. But yeah, that's the deal. Let's see what these, what am I looking at? I had Amazon puts too, which I only bought 2 of these. I could have added some to these even today or even yesterday on these Amazon puts. I didn't, but they've actually gone green now. For my average at 365 is my average on these 135 puts on Amazon. I'm just thinking on Amazon, if we got to pull back on Amazon, if we got to pull back in the market, Amazon is one of those that could be a little bit of a higher beta than the S&P. So I think that obviously it's still building higher lows, but if it came down below this like 135 area, it's a good chance we get down into this gap fill. Sub 130 gets really juicy, and then I would look to take profits on any pullbacks below 130 into this gap fill, and that's the hedge almost for Amazon. But I would be surprised if Amazon ends up not filling this gap. That would be crazy. Imagine if we just kept going. Like if we just kept going from here and Amazon has this massive glaring like 10% gap fill that it never comes back and fills. Like that's wild. Usually, not all the time, but usually a lot of these gaps get filled at least at some point. So if we did come up, pushed up, maybe, years down the road, this is going to get filled if we saw a further extension of a bear market, right? Maybe. ARK is back under 50. ARK pushed up to 54 almost, hit 53 something today, but look at that. Crazy move on ARK. Actually hit the top of our little makeshift channel. I didn't really draw a perfect channel. I just kind of drew those lines in just based off what I was visually seeing a couple days ago. But that was actually a good short opportunity there, looking back. All right, let me jump back in. Started buying cold under 12. Tesla, please. Let's take a look at Tesla. Tesla chart. So Tesla weaker than the markets today, for sure. It's kind of just in this weird chop. If it holds, looks like this, honestly, kind of setting up in a very short term, like inverse head and shoulders. I don't know if that's going to hold. If we see further downside tomorrow, that could just break down immediately. But these are kind of higher lows. This is kind of what you're looking at. Inverse head and shoulders there, barely, it's very short term. I wouldn't really play off of that. But if we fall below this 840, this is your spot right here, prior high back on the 22nd of July and then prior low from like 2 days ago. That's your spot right there. That breaks down. I think we're going to have a shot down towards this gap. this gap that we had overnight, I think after earnings, the day or two after earnings, this would be the spot down towards the top of that area is 765. Bottom of that is like 750. So I would love it. 50 SMA is down there as well. That's a really, in my view, it's a very nice dip buy area if you think the market's going to go higher. Especially Tesla will be one of those more volatile names if the market does go higher. So that's a spot I would say I would like. It's below the 200 moving average for now, showing to be resistance for here. So like 915 is going to be a resistance. It's kind of in your range. So like 840 to 915 is your kind of range for now. And then I think a pullback offers a much better risk reward. And then from there, we can see how it wants to hold up. A lot more volume is traded down here. So we should have some volume support down here under 750 as well. Boom. I mean, all those, we looked at the cheddar flow. I mean, this is nuts. This is insane from what I'm seeing. ARK, $1.6 million put sweep. You know, a lot of these options I was seeing expiring out into September or October timeframe. I think it just from a realistic standpoint, if you think about it, you know, the time frame makes a lot of sense. Like the October, if you're looking for hedges or puts or if you're looking for backstop, I think the October time frame makes a lot of sense. I have September 16th. Maybe I'm going to be a little early on that. Maybe not. I don't know. It's enough for me. I'm thinking that, hey, if we were to pull back through September 16th and even pull back beyond that, I'll take off all my hedges anyway, because I'll have to, because they'll expire. Take off all the hedges and then hold more cash. And if we keep going down, just like slowly kind of dollar cost average into some dips that I like. That's kind of like at least my thesis or thought process going into it. But we'll see how, you know, the 10-year looks and all that stuff. Obviously, if the 10-year ends up, let's see, where's the 10 years at? If the 10-year is rallying, right, and we get a big dip in the market and the 10-year just keeps going, I'm not going to be inclined to buy the dip until I start to see the 10-year kind of pulling back. You know what I mean? So that's kind of a guide for me. We'll see. We'll see. But, you know, we'll cross that bridge when we get there. So there's that. So, I mean, the thing about those, again, the thing about the QQQ needs to go below 300, not necessarily, because if you think about it, like, let's just say Amazon, right? For example, let's go to QQQ. Let's say you bought QQQ. Let's look at one of the cheddar flow puts, right? Here, SPY. SPY, $1.8 million put. Now, some of these can be hedges, let's be honest, because when you're talking about some of these hedge funds and big money, they're playing with so much more money, it doesn't matter. Like a $1.8 million option play is a hedge, you know what I mean? So it's not a big deal. But a $3.99 strike for October 21st. Let's go find those options. So let's go and find SPY $3.99 strike for October 21st. Okay, let me scroll down. I know it's super small, but let me find it. Here's October 21st. And let's go find the SPY 399s. There's a ton of options popping through here. Okay, we're getting close. Here it is. So it was these puts. Now, these are actually pretty expensive. Oh, nothing crazy, but they're somewhat expensive. These puts are going for currently just under $8. Okay, just under $8. Now, if I look, here's where there's a big. These two big volume bars were probably what triggered this alert, right? So you have this volume, which was actually bought yesterday afternoon. This was bought on 8/10. So yesterday in the afternoon, there was 12,700 contracts purchased for a price, looks like right around this $8 area. So do the math. I mean, that's absolutely insane. I'll pull it up. Let's see what we can do. Let's pull up the calc. I can never find the calculator for whatever reason. I always have to type it in. Calculator. Do the math on that. So, okay, what is it? $8 strike price, times that by 100 to get us into dollar amount in option terms, times that by, was it like 2,000 contracts? Let me double check. We had on this guy 12,700 contracts. So what is this going to be? This is going to be mega in terms of a dollar amount. Yeah, that's, I think if I can do my math, that's millions of dollars we're talking right there. So there you go. That was probably what triggered the alert. There was another one to this morning too, briefly. There was about 2,500 of those purchased. Looks like around 750. So if you do the math on that, what is that? So 750 on those times that by 2,500, those contracts being purchased, and then times that by 100. And there's your, looks like $1.8 million trade right there. So, yeah. But if we got a big pullback in SPY and this went from 7 or 8 to 10 to 12, that could be taken off. They'll take that off. They're not going to probably hold that one too long. So, but yeah, that's insane. If you think about it. TLT swing, I think it's a good idea. You got to give it time, I think is the key. Yeah. 42 on the T. Yeah, the TQQQs, I got the 40. I just felt good about having in the money on that, having them decently in the money. They're not going to be as volatile. Obviously, if you go on if you went with TQQQ puts, like for example, today alone, on the same time frame that I'm looking at, if you had, let's say, like 35s instead of the 40s, let's look at this chart for the 35s from today alone. Today alone, they went from 220, let's see, 220 at the lows, up to now they're like 290 almost. So that's a 30% move just today alone off the bottom. The further out of the money you go, the more moves you're going to get. But I just felt comfortable playing the ones I'm in now. So there we go. Let's see. Jumping back over here, 10 years still sitting up there pretty. The DXY is actually here. It's 105. It doesn't look too good, but we'll see what happens on the DXY. That's the dollar index. Checking on my IWM put. Oh yeah, let me go back to that and see how that's shaking out on the option layout. They're going for 135-ish right now, up on the level 2. I think I'm gonna hold. I might trim off. Let's see where we close. We still got 30 minutes. See if we just push a bit more down. I don't know. We might. I'll probably take off another couple of contracts here and hold like 3 to 5 of these overnight. That's my plan. TLT works similar with BND. Let's pull up. Vanguard Total Bond Market ETF. Yeah, it's not a bad idea either. Yeah, it's actually very similar. Very similar. Yeah. Same thing. I think you could play this too. Similar. I just for whatever reason TLT is like something I've traded many times the past, like, I don't know. I remember trading this thing back in like 2016. Oh, is it 2016, 2019 maybe. Back when I was touching options in my fresh Robinhood account. Little did I know anything about, getting destroyed by theta decay and all that stuff, right? Back when we were young. No, yeah, but this is the same idea. I think this could come down, maybe 50 SMA at least, 75, 50, could be a little more. It could come down even more to that, $75. If that got into this area, I think that's a good spot. Even now, it's not necessarily a terrible time to accumulate that. If you think the whole reason why, here's the reason why. It's because we've seen it right now with the 10-year. What you're betting on is this. This goes down when bond yields go up. Okay, they've gotten destroyed because bond yields this past 6 to 12 months or past 6 to 8 months have just gone straight up. Now, we are potentially topping out on yields, and I like to look at the 10-year for that. That's what I like to use the 10-year for. The reason why I think that is because we had this right here, we had this high right here, crazy moves, and then we have had lower highs. Now, I do think we could potentially breach this like 310 area, but if we breach, I don't know if we're going to breach 325. So if we don't breach this 325 on the 10-year, that's like, this is the spot. Like if we get up into this area, like over 3 is like the loading zone in my opinion. And then if we break up over 3.25 and hold that, then that's like the signal to get out. Obviously, it could fake us out and could go lower or whatever, but I think that would be kind of the look on this. And why? It's because it's the Fed. I think realistically, this whole Fed pivot everyone's expecting, I think you're going to have maybe a period of time next couple of months, weeks to months, I don't know, who knows what the time frame is, where people start kind of backtracking on that pivot. The Fed's already come out and has essentially tried to backtrack the market anyway yesterday and everything, because they don't want the market to be up. That's not helping their inflation cause by any means. It would help them if the market was down lower, or at least consolidating, not bouncing right back, which you can kind of see how it's doing exactly what they didn't want to do. And then that's not a good look for them, or that's not really necessarily going to be good. And if you're trying to fight the market, I don't know, that's not the Fed's job, but it seems like they're trying to do that. And that's playing with fire, I think, because you're essentially everyone who's like, don't fight the Fed. It's like the obvious trade, the easy trade. And so everyone does it, which only can make the squeeze out even worse if everyone's buying puts, essentially what we're seeing right now, I think. And we could see that times like 5 or times 10 in a couple of months. Hence the idea why I like now all of a sudden, backtrack, Fed is actually going to raise a little bit more than maybe the pivot's not going to come as soon as we thought. I think that people got ahead of themselves with that. Maybe it could be wrong. I think it's coming at some point, but maybe the market got ahead of itself. Bond market leads us anyway, so who cares? Bond market's where you are going to find out, right? And this has been telling enough. If this rallies back up and then starts to get weak again, that's just going to tell you that we should probably be seeing a pivot at some point down the road, and that is the pivot that I think will be more serious and actually happen in a more realistic sense for the market instead of right now. We're not close. The inflation's still way high. We got to start seeing that number come down into the 6s, into the 5s on that year-over-year inflation number. We're still in the 8s. So I think that we have some time to get even close to that, and that this window could be the time for a pullback, could be the time for rates to for yields to push back up a little bit. But then in a month or two, maybe that inflation number, now we have a couple months in a row of it coming down, down, down. Now the pivot becomes a lot more clear, and then that's your opportunity to actually play off the pivot and for the backside of yields. That's the whole idea, the whole premise of the TLT trade to the long side. Because if yields go down, TLT is going to go up, and so would BND. Same thing. Volta has earnings day after hours. No nat gas short. I'm personally, let's see what Boyle's looking like. I'm not probably going to touch it. I haven't followed it close enough, but we did like the idea. Yeah, Boyle's up here eventually, again, lower high, so that's not a bad idea. If it gets going over with 107, 108, be careful, but not a bad risk reward for right here. This is just Boyle's like the leveraged long natural gas. So you can short this, you can go long cold, whatever you want to play. KOLD just ripped $1 in an hour. Jeez. You gotta be careful because this stuff, when you're playing the leverage ETFs, they move. They can move a lot very fast. SPY calls. I'm not interested in SPY call. Where's SPY at? It's actually just flat. I'm not interested in touching any of that stuff, but get some backfilling, and maybe we start to see bonds push back up. We start seeing people starting to say, hey, it's time to go short again, right? Fear and greed turns back down to fear or extreme fear, let's just say. Then I'd be interested in some SPY calls. But right now, we've gotten this. This is a great reset on fear and greed for now. We're not really into extreme greed yet, believe it or not. Some certain categories of this, yes, you'll see that, but not really. We still look at this. Still, we haven't seen a true flush out like we saw back in March on that March rally that we ended up pushing up and breaking down. Here's why I think that this rally actually can hold up better than you think. Because in that March rally, what we saw the put call ratio go from is like 0.9 or 0.89, and this thing fell down to 0.6, 0.65. Now, there's all different put call ratios. You'll think, okay, why is this site saying this? This is a 5-day moving average. Pick one of them and play and watch that one. Don't go and say, well, the put call ratio I saw over here is 0.8. This one's 0.6. I've seen different calculations. I've seen 5-day averages. I've seen 1-day average. Just pick one and watch that chart, get a trend. So this is the one from the fear and greed from CNN Business. I don't know why it's CNN has this, but whatever it is, it's CNN. Who cares? It's data, right? So essentially, I'm looking at this and saying, okay, we saw a pretty big flush down towards the end of March, which we rallied really, really hard at the end of March. Makes sense. People started buying calls again, and then when this put call ratio came down to a level we hadn't seen really since January. Then guess what? Market decided to turn and we went down to new lows after that. Well, right now, this hasn't come down that much. It was holding up over 0.8 for so long. It really hasn't come down, which still tells us a lot of people are positioned with puts. A lot of people still are, despite this move up. So you tend to see fear and greed become, okay, everyone's getting super fearful. Okay, time to go the other way. Big picture. People are getting very, very greedy. Time to go the other way and start playing the backside. Big picture. But if we pull back or we're sitting up right here, we never really saw this fear and greed come down or this put call ratio come down a lot to tell us that in the market, people have gone from buying a lot of puts to now buying a lot more calls. We're still seeing, relatively speaking, so far from this year's past 6 months, 7, 8 months now, we're still seeing a lot of puts being bought. This number being up over, 0.75 is still telling us a lot of puts are still being bought, which tells me we can go higher. This could squeeze out further. There's still a lot of people betting on the downside. A lot of people betting on the downside. That's a concern that I have on the put call ratio. So I want to see a big reset back or a big push back to extreme fear for me to be interested in that, realistically. Did you see TTOO? Yes, I did. Yes, I did. For those who had it, who held through it, great. I mean, the way this game kind of works is they tend to go. I made a few bucks on it, but of course today TTO hits 30 cents. Now, again, we had this, or at least we was mentioned on a stream by someone in the chat. Awesome call out. We saw the volume coming in. I took a position back here. Let's see where I took a position. I had an average at like 13 cents. And then when it popped up, they actually had news a couple days ago, and it popped up on that news. I think it hit right here, 16 cents, and I saw it fall back off. And I was like, okay, well, seems like it was fluffy news. I don't want to mess with this thing. I'll let it kind of fall back off. And then what happened was it fell back off, fell down to 12, and then built higher lows from there. And then just boom, pushed out, hit 30 cents. That's over 100%. Massive. I mean, you had a feeling that was going to happen at some point based on that volume. And this thing was just, crazy oversold for so long. These pumps, they eventually happen, and 100% boom. So that's the value of playing some of these bottomed out plays. I have, one picked out right now that I'm currently in, that I've been in for a while, of course, but I'm looking at going forward. If we get pullbacks and I have a little more cash to play with, it's going to be small caps, and then rotating money out of, let's say, the hedges, and then out of taking profits on the bigger picture trades as that happens, if it happens, using that money, recycling that money back in to looking at swing trading off of small cap bottoms until the market tells otherwise, until that 10-year, until we start seeing all those indicators of a risk on environment telling us otherwise. Like that, I think for the next couple of months, potentially longer, is going to be a really good spot. And I would not, I'm not a big momentum J trade small cap kind of guy at all. So it's not something that I'm going to focus on. It'll just be focusing on, okay, what sectors are hot in small cap land? Let's find some stocks, find some charts that look good, and then play off of those stocks sitting towards lows, good risk rewards, down towards supports. That's what it's all about, I think, in the small cap game, in terms of your best risk reward. So, yes, that is the deal. I think tomorrow we can nice little free fall Friday. We'll see. I think it'll be. I think it's a very realistic outcome for tomorrow. Don't think pivot's coming soon. I think it's 2023. I think for sure. My thought on the pivot is this: we'll see what happens, but the job market, once the job market really starts to turn, that unemployment rate starts to push up, and we start seeing the job numbers, job data coming in, and it's like, oh shit, like this is not looking good. Once we get something like that, that is, I think, where the Fed becomes a lot more serious about a pivot. Until that, they're like, hey, we're not really in a recession. It's fine. Job market's okay. Like that's how it kind of seems, right? So I think, and that's lagging. That does not happen when you raise by 75 basis points the first time. That's going to happen months down the road. And if they're still aggressive, let's just say that in September they'd pull another 75, because they could, they might, because if their goal, whether they're saying it or not, is to get the market to come down lower to really help inflation, they might just say, let's just shock them here, even though the expectation is a 50. Let's shock them here. Inflation's still pretty high. Job market's looking pretty good. We're probably fine to do another 75. They do a 75 come September. I mean, market might see that as a surprise, pull us back down lower. And, that's going to ultimately, 6 months, 12 months after that, it's going to be probably pretty impactful. It's going to hurt a lot more. But in the meantime, you're not going to really see too much in the short term off of that. But as we kind of roll forward, let's see how these job numbers come out. Let's see how these other economic data reports come out, and see if these effects or these hikes are really starting to pull into the market and starting to take us down in terms of slowing us down a lot more than maybe we have been, and the Fed has originally kind of seen, right? So that's kind of the thought I would say on that. Let's see. IWM. Yeah, IWM on the another reason why I like this thing, I like it short too, for the overnight. I mean, I've locked in like half the gains anyway on the day trade, but yeah, 200 moving average, it touched just below that pretty much. And now it's got some gaps potentially to fill right here. We have this gap from Was a CPI. So we had, we got this move. We got this little gap back into the lower 90s is a realistic spot, for tomorrow. I think if we saw a free fall Friday, we'll see. But you're going to have, for those who partook in, is that even a word? Partake? I know partake is. For those who experienced this run off the lows, I think that there's some good profit taking to be done, especially after this week. We got some squeezing out, and this move today is not super strong. So, IWM is currently green. SPY went red. QQQ went red by over 0.5%. So this giving it back after a pretty strong morning, giving it all back, doesn't look like a strong close by any means for further upside tomorrow, unless there's some news. Obviously, anything could happen, but my thought is that we are probably setting up for a red day tomorrow. Anything can happen based on how weak of a close we had and how strong we looked early on today. So we'll see. We'll see. End of 2023. Yes. So the thing with the pivot is that I think it comes in next year. Markets front run. The market's trying to front run this it's feeling like miles ahead, right? So that's fine. If the market kind of has a gut check and says, oh, maybe it's not as close as we thought, next couple months, and we pull back a bit and then rates pop up a little bit, that's, I think, the opportunity. Because I think it's going to come, especially if the Fed keeps raising it at the rate that they're raising at. It's going to come. And then when it actually comes, when the pivot actually comes and it actually hits, that will be, I think, a really, really big rally. Now, we are going to run up before that because the market will sniff that out. The bond market will probably sniff that out. So you want to be ahead of the game. But we'll be watching the bond market. We'll be watching, let's say, DXY. We'll be watching, a bunch of things that will be potentially sniffing that out. And then once that starts to get sniffed out, that's, I think, the opportunity. And then once it officially happens, then you might be in a true risk-on environment for a good period of time, a couple of months, and that's the squeeze that I think that we have the potential for, depending upon how sentiment is, depending upon the put call ratios, depending upon a lot of different factors as we get closer to that time or as this plays out. Right? Let's just see. I mean, who the heck freaking knows? Where the market's going to be in a month, right? No one knows. So depending upon all that stuff, we'll have a much better feel, I think, for that pivot potential and the squeeze potential and what that sets up to look like and all that stuff. I think that this rally right here, you had a lot of people betting on the backside of this rally this whole way up who got slaughtered, and you kind of can see that. And now we're going to see what ends up happening here. I still feel like you still have a lot of people who are expecting downside, which I think is going to limit your pullback potential, just realistically. But we'll see. We need it. We totally need it. I'm hedged for it. So I would like it. I instead of the current cash that I have right now and having my hedges expire worthless, I would like we get a pullback to take the profits from my hedges, hold that as cash, now have all this cash, and then be able to funnel that into small caps and funnel that into bigger picture positions that I do like 6+ months out time frames. That's what I would want in a perfect world. Too early for a pivot. I think that's the idea, and that might be the narrative in the next couple of weeks from CNBC news outlets and whatnot. I think that's where they're probably going to start not pushing, but that's what they're going to be talking more about. So here's this. Geez, what a killer! 50%er. Geez. I've been loving playing the IWM. The IWM options, man. I had another one of these today on the small count. I'm like a day behind. So the small count video that I post later tonight on the short, for those who are not familiar, I have a section of a playlist called the Roth IRA, small count challenge, whatever it is. I post shorts every day or after every trade there. In that account, we got back up over $100. I did add 50 to it, so I've technically I've put in $150 to the account, and we're technically down all time on it. But three green days in a row, I've been getting a better feel for what I want to trade and then what moves and where to play at the monies instead of playing far out of the monies. The far out of the money plays have been just destructive to the account, and it's not worth it. So I've been trying to play closer to the monies, or at the monies, but closer to expiration time, which is very volatile, but you don't have to play as big size. And so you're either right or wrong quickly, and then you get in, you get out, and that's it. But yeah, it's been I'm like a day behind. So today's post will be like yesterday's trade, and then tomorrow's post will be today's trade, and then Saturday's post will be Friday's trade, probably. Unless I don't trade one of those days, which then will be caught up. Because I don't have to. Do whatever I want, I guess. BNGO going for 10. What do we got on BNGO? BNGO. What do we got? Where's that? It's that 3. Oh, my. Yeah, BNGO is a funny stock, you know, back in 2020. Was it 2020, right? Yeah. Oh, man. End of 2020 into 2021. What a monster this was. You got some strong resistance up here towards $5 because you tried to hold 5 for months in 2021, and then eventually into this really come November of last year when small caps took their true flush, this thing got destroyed. But $5 would be very strong resistance. If it breaks through that, this can go for a lot more. And it's shown you it can do it. It's shown it in the past. So I'd be prepared for that. Here's another idea. Let's look at AMC. Here's another idea. AMC, strong day today. Well, we're looking at the weekly chart. Let me go to the daily chart. Strong day today, but couldn't break up over the highs here. On a red day or a couple of days in a row, this could come down a lot. I think some of us I didn't touch them, but some of you guys in the chat were saying was it Monday or Tuesday? Maybe it was, I forget what day it was, Monday or Tuesday, playing puts on AMC. I think on this day that it was up a lot. And then if you locked gains the past 2 days, you're good, but it bounced back 8% today. If it can break over the highs of Monday, well, look out. I wouldn't want to touch that, but we'll see. We'll see. A lot of the people in AMC are also they're the most, I don't want to say easy to manipulate. They're some of the most easy to manipulate in terms of retail traders. So red days, they buy puts. Green days, they buy calls. They're just chasing left and right. Sometimes it works out. Sometimes it doesn't work out, but that's just kind of the sentiment you're going to get from that. So, you know, take that as you see fit. But I think if we saw a red day tomorrow, good chance you get a pretty big pullback on AMC. I'm not sure how these options are looking though. That's probably something more so for like maybe even a day trade tomorrow. I wouldn't even necessarily want to hold overnight. You're taking on more risk than you need to overnight. But you know, for next week expiration time or next week expiration on like a put play for like a 25 put. It's not that expensive. It's like 275. It's not that expensive. The range will be there, so it's not that bad looking at it. Not that I'm taking it, but if we do get a dip, I want to start dollar cost averaging into IWC. Yep, that's micros, microcaps. I think those will outperform SPY too in this because they've been underperforming for so long. TGL, IPO. Yeah, TGL is up like a couple 100% today, right? Yeah. Well, those IPOs. It's been a hot sector, don't get me wrong, but these things are wild to trade. I mean, absolutely wild. Halts up and down. Like in Shop, NTV, or NVT. Let's look at those two. IWM bounced a little bit. Let's see what I got on Shop. Shopify, I think, is another solid play. Oh, this could be a you know what? This is not a bad idea at all. This one has incredible range. So if we got a bigger rally this late this year, let's just say, this is a night. This is you know what? That's what we got to put in the Robinhood. We got to put this in the Robinhood because I remember looking at this before and I was like, I want this one in the Robinhood. If we get a substantial dip, I need it's an if. It's not a guarantee. I would like Shopify. Let's just I'm going to put an alert. I got to zoom in. This chart's all wonked up. I'm going to put an alert. Give me a second here on this. So this way I'm going to be notified. If we get a touch of that 50 SMA, here we go. Value crossing. I want to see crossing down. I'll just say crossing that 50 SMA. So when we touch the 50 SMA on Shopify, I want to come back and take a peek. So that right now is at 35, 34. Moving average, crossing. Oh, wait, no. I always screw these alerts up. I got to make sure I fix this alert. Get rid of that. I want a 50 SMA bounce or a 50 SMA touch. Give me the 50 SMA. Add alert. Let's see. I want the stock cross in the 50 SMA. Let's see if I can get that condition. Add the alert. Let's see. Condition. I want Shopify crossing the moving average 50. There it is. Boom. Only once. That's fine. So there it is. There's the alert. We're in. The alert is in. So now if we touch 50 SMA, I'll be alerted to it. I think as long as it holds like $30, it's freaking great. It started to break out. I think you're seeing a lot of stocks with these kind of, I don't want to say false breakouts, because they obviously could pull back a little bit and then just rip face. The question is, how much of a pullback do we get? I would love it down here. If Shopify starts coming in sub 35, I mean, that's a spot in my view to toss it into the portfolio and not have to worry too much. It's down a ton off the highs. Obviously, could it go much lower if the market was lower? Yep. But you're betting on the market to not go lower. And also, it's something that I wouldn't mind holding anyway for a year or two for a recovery. So that I'm not really that concerned. And even dollar cost averaging lower wouldn't be terrible either. So that is the idea. NVTA. Let's take a look at this guy. What are we looking at? Oh, geez. These are not anything that I like to touch any time off of these massive backsides. However, let's see where it wants to develop support. So let's see how it, maybe this thing tries to hold like $4, right? But for right now, this is be careful, because this thing could just keep coming down and it could be back down to new lows. So you want to see if it starts to hold up and start to build some higher lows, let's say tomorrow or into next week. This could be setting up for that secondary squeeze out, but it just needs to hold up. It needs to hold up, and you got to be careful, because you got to always check these companies if they're at risk of an offering, how much cash they have on hand. Is there an S3 on file? It's always a good thing to check, just because you could be at risk of an offering and then you're underwater. And now sometimes those could be opportunities to squeeze out further, but not something you want to bet on all the time to the upside offerings, at least. So there's that. Here's IWM pushing back up a little bit into the close. I'm probably going to get rid of some of those contracts here. We got 5 minutes tomorrow. Well, I guess we have more than 5 minutes, but until these things stop trading. But SPY trying to go back green. Our SPY's flat. QQQ's down 0.5% as we speak right now. Jeez. Let's see. Let's check on how this position is doing. That TGL is pushing highs. Option trading layout. I always throw this off. So these are going for like 130. It's like now it's like 30%. So that's pretty volatile. But I think what I'm going to do is sell. Let's see. I'm going to get rid of 2 of these contracts at like the 130 area. And then I'll get rid of 3 just to lock in a bigger gain. I'll get rid of 3 of these guys at 130. And then I'm going to hold 4 of them overnight. So I'm not risking really much downside. So I'm going to hold 4 of these IWM puts overnight. And they expire tomorrow. So they're in the money. So they should hold some value, which is good. But just be careful. I'm just going to be careful and not hold a ton of these overnight. So a little bit of a balance into the close, it seems like, is what we're trying to get. Jump back to SPY. Yeah, still technically a lower high here. Still, SPY was a really nice trade off this morning, believe it or not. When you saw this, would have been a really good trade. When you saw this VWAP rejection, because it held VWAP pretty much this morning when it fell back below. Once it came back and tested VWAP, it was actually a really good short. And then you ended up getting a short all the way to the gap fill. So essentially this gap up overnight tonight or last night. This is your zone from yesterday's close or yesterday's highs. I be careful sometimes. Sometimes you don't get the full gap fill. It'll go down to like the prior day's high and then bounce. So if yesterday's high was pretty close to the close, so it's fair enough. But yeah, you got that move. So it was a nice target to the down. It would have been a nice trade back down today on SPY. So sometimes just letting the bigger picture play pan out, it's not a bad thing. Just let it do its thing. Not too shabby. Let's see. Portfolio's dead flat. Let's check on the Robinhood here and see what we got. This week, let's see how the week is doing. It's down % this week. Yeah, whatever. I mean, the thing is we've been pulling more cash out of it. The reason why I think it's taken a big hit is because today's late day sell-off, plus I got Labu. I got these Labus. I also sold calls, so I cash flowed a few bucks from the Labus, but I bought that. Should I have probably waited? Yeah, I guess I could, but the bigger picture is what I'm looking at here. I'm not really concerned with the day-to-day on this account. So the plan is going to be to add into this potentially, or add one more contract. Honestly, maybe just add, not even another 100 shares. Maybe to add like a couple shares here and there if we do get further dips, 10 at a time, and then just still sell a covered call each week. And that's the plan on this thing. Obviously, when the time comes, we do bounce. This thing can you get taken out in 2 seconds because this thing can rip face. But the options are pretty juicy. So if you look at these, it's risky. So you wouldn't want to do this with a lot of the portfolio. Hence why it's 10% of the account, and you can sell covered calls, fat juicy premiums. So I'm not really too worried about it. But if you look at this, and you went out to, let's say, next Friday on these Labus, go sell a $12 covered call, get paid $60. So even if we do go lower, you got paid $60 to maybe, hold Labu. Maybe it goes down $1 or $2. Yeah, so what? You're down $200 unrealized, but you got paid $60, and you could roll these options, which I should be doing more of, but you can roll them to cash flow a few extra bucks, especially if, let's say I sell the 60s, we dump even further. Now I can roll into, let's say, the 11s, or I sell the 12s for 60 cents. I can roll down to the 1150s or the 11s if we do go way, way lower and cash flow a few extra bucks off that and let it expire worthless and then move on. Like, that's a very valid idea as well. So I felt pretty fine about doing that. I just wanted to get in just because I felt like, what if we keep squeezing out? I have no idea. And in the bigger picture, I think the pullback is not going to be as worrisome in the next couple of months, whereas you're going to look back in a year and go, yeah, who cares? Time when you're looking at 6+ month time horizon, a year plus, which is the time horizon for this portfolio realistically. Now, obviously, we got close. Like Snapchat was looking really freaking strong at 11.10. This thing I sold a 11.50 earlier this week. I rolled it to the 12s. Just in case, because I wanted to hold Snapchat. I don't want to lose it. But same thing, like Snapchat, if this thing pops up too fast, like, okay, I'll take it off. It is what it is, Intel's up today, which is nice, I guess. It's a big part of the portfolio. But I'm thinking if we have, buying power is 12 grand. That's margin. I'm not going to use margin, but I think a Shopify in the 30-ish price range, kind of in line with Intel's price range. Shopify, Intel, and then what we have right here in terms of a little bit more volatile stuff is probably a decent. It's still riskier than, let's say, your buy and hold ETF strategy, but you're selling covered calls, so you're minimizing your risk by doing that, which and selling puts. So that's not a bad idea. That's what I'm playing. That's how I'm going to play it. So market's closed. SPY pushed up a little bit into the close here. Pushed up to actually finish green, barely. 420.01 was the close, at least for now. Maybe that's going to get adjusted. 420.01 is the close. Start selling TQQQ puts next week. And that's, if we do pull back, they'll probably be juiced. They'll be juiced up. Made 1.8%. Killer. Outperformed big time. Let's check in on the Webull. How this account's looking. There's a lot of stuff in here. Let's just see. 20K. It's been holding kind of. It's technically down this $1,500 a week. The biggest thing, I guess, is that I was more heavily weighted on hedges and puts, I guess, this week. So any longs that I had did not perform enough or didn't outperform my hedges, which is fine, whatever. But that's the deal there. So I don't really care. My whole thought was, like, if I can come out of a pullback, if we had a big pullback in the market, if I can come out of a pullback in the market, and so those IWM puts are sitting here. I have 4 left at 103. I'm going to hold those for tomorrow. It's risky, but also I locked a lot of gains in today, like a 30+% across them all, 30% on some, 50% on some. So I locked pretty much all those in. So the risk reward, and I had 12, so I only have 4 contracts left. So the risk reward is fine to hold overnight for me. Plus the way we closed doesn't bode well for tomorrow, I'm thinking. We'll see, could be wrong, but closed pretty weak, relatively speaking. It did bounce a little bit into the close, but we closed pretty hard to the downside, at least on SPY and everything. So Friday, we'll see what everyone wants to do into the weekend. I guess got lucky not claiming skill. Yeah, no, let's see what this is. This is technically down. I don't know, whatever. But my thought was, if we can go through a pullback in the S&P and I'm sitting around, if the Webull is sitting around 20K, that's a massive freaking win, because I'm sitting on 3,500 cash in it now. Take the hedges off, ideally brings in some more cash. If we do drop enough, then that cash might be, substantially higher. But sell the hedges, salvage them and or ideally, make a few bucks on them, and then take that cash. Hopefully it's like double what I have right now in cash. Take that and then start rolling that into the options that I want, or the small caps that I want, and bigger picture positions that I want, into a pullback is ideally the plan. So with that said, here we are. A 10-year, by the way, finishing pretty strong, also doesn't bode well in the coming days / weeks. You can't use the 10-year as a day-to-day. It's not great to look at and say, oh man, the 10 years up means market must go down today. Nope, it doesn't mean that. But bigger picture, if we get a pretty big reversal in the 10-year, which we've been getting off the lows and looking pretty strong right now, let's be honest, 10-year pops up over 2.9 into tomorrow, doesn't bode well, I would think, for the next week or 2 or 3 or 4, right? If that trend continues. That's the idea. So there we go. Coinbase, how is she looking? I mean, we talked about this one about like a half hour ago, but holy crap, you want to talk about range. Coinbase this morning was at 100 and something bucks, and it finishes the day at under 84. Hit a low of 82.31. Range. This is the gap to fill. It has room to come back even lower, I think, but it filled this gap pretty much today. I think 75 will be your next spot, upper 70s, and then below that, 50 period moving average is a much better buy back in the 60s. It's a ton of range. I mean, you have higher lows developing on this thing. I just be careful, I would say, of buying this thing on a breakout, which I think a lot of people got suckered into doing past couple of days. So I think pullbacks from here, are your friend on Coinbase. If you like Coinbase, if you like Bitcoin for bounces, all that good stuff. So coin scares me. Yeah, it's a volatile stock. You don't need to trade options on this. You can just trade shares. I mean, it's volatile enough, down 10% today. I mean, it's volatile enough as of late. So you could trade shares and up and down, left and right, short, long. There's opportunity all over the place on this thing. So let's see. IWM finishing here at 196.40. No, actually 196.80 in the after hours. It popped up a bit too. So IWM has some relative strength. It finished stronger than the S&P. Still didn't really totally fill the gap, fell all the way back down. Got close, didn't completely fill it. But it's got another one right here. Big, could be into next week time horizon thing. But it got another big gap to fill back in here off the CPI. So if it gets below 193, it's got some room to come back down to like 190. That would be your gap fill there based off the CPI. So we'll see if we get that next week. But yeah, it's only like $7 down. It's only like 3%, 4%. Not that crazy. But yeah, Coinbase is another one like Tesla. They're two pretty volatile names. I don't necessarily think you need to try to figure those out all the time. See where XBI finished. XBI finished here at 90.79, which is, if we zoom out on XBI, still technically a higher low compared to, what is this, like what, the 9th? What is the 9th? 9th was Tuesday? Compared to Tuesday. So I mean, realistic on XBI, I would start to get a lot more serious about buying some of the March. I'm not going to touch any more of my January expiration contracts. I'm going to leave them. I'm going to buy March. So I have March 10s and 15 strikes for my Labus, which are a 3x ETF for XBI. But we start coming down below 85, then I'm going to be interested. This is kind of the zone. However low it needs to go, I don't care. But I'm going to start looking at buying it there, into that area. We'll see. Got my IWC. Let's see where IWC is at. This, similar to IWM, had probably a massive gap to fill going back to 2020-ish time frame. Not really. But yeah, it came down to a really nice spot down here into this like 100-ish area, 105, 110. Maybe you don't get that low. Let's look at the daily chart on this thing. Maybe you don't get that low again, but 50 SMA is at 111. So I think down to like, first off, this high right here, so like 119 could be like a nibble spot. Then this area right here could be another nibble at like 115, and then below that 50 SMA. So let's see those two areas. I'd say anything between 119 and 115 could be a spot, depending upon how the market wants to do or hold up and how long it takes to pull back or bounce or whatever. That could be a spot, a zone to start looking to accumulate some. Maybe. This is the micro cap ETF, so it's not IWM. It's not an individual stock. It's a collection of stocks all with very, very low market caps, very small market caps below what you would see in IWM. So it's like penny stocks essentially. Now, I think this sector or these stocks will perform substantially better in the next, like year or so. I don't know, into this post-Fed hiking cycle, whenever this plays out, they probably will do better than the S&P, I'm thinking. But the question will be, in the short term, where that dip buy is. It's anyone's guess, right? Coin's a good swing trade, both sides. Yeah. Let's see. I don't know why they shut down a bunch of wells in the Gulf to drive price of oil back up. There's a leak in the pipeline somewhere. Yeah, right. Yeah, no. But let's see. We haven't checked oil. Let's see oil. Yeah, 94. So it's nothing crazy, but oil is at 94 here. Curling back up. I thought we can get down to like closer to 85, 84. We didn't get that low. Whatever, who cares? But still lower highs. If this thing gets up over 100 again, maybe we start getting more interested. I have a little level here at 105. Breaks over 105, look out. But that's what I think we can get it. It could pop back up into the 100 area for sure. Not to mention, though, that would start to kind of get people a little bit nervous about inflation coming and creeping back in. So there you go. I think this could be, maybe an opportunity for market to also, another reason why the market could pull back, right? The 10-year, we'll see what DXY wants to do. Those are all little mini indicators that are all like, they've reversed, but on a little bit of a bounce, it could offer a pullback for market at least. With that said, I'm going to wrap things up. I appreciate you guys are tuning on in. We'll do a Friday stream like we usually do tomorrow afternoon. So we'll hang out and see how things play out to finish off the week. But I think the way I'm playing it now is just hedged. I'm hedged pretty well. Let me check on my Mara position. Let's see. I have Mara puts. I had shares short. I got stopped out on those, and then I got into puts today. Versus I was looking to play it against $20 as my area. Why? Because that's very nice support back in here. So $20 will be a strong, or 20 to 21 roughly. I only got 2. I was looking to get 3 to 4 of them, but I only got 2 because essentially once I bought them, we ended up flushing off and going lower throughout the day. So it is what it is. But yeah, that's really it for today. So that said, I'm gonna wrap things up. We'll see how tomorrow shakes out. All my puts that I'm buying are out September 16th, so they're out a little over a month. Expiration time. I'm going to be not away next week. Next week will be fine. We'll do a lot of streams, but the week after that, I'm going to be away for like 10 days-ish. So like that entire week, the week after that in August, like the 18th or whatever, like the 20th or whatever that week is, will be no streams, unfortunately. But I think it will be, knowing my track record with how this works, whenever I'm away and like either on vacation or visiting family, the market always drops. So if we're trying to time it up based on that, not next week, maybe next week too, but the week after next week could be a red week in the market. And I figured, let me make sure I'm hedged beyond that so that if I am, or if we do see downside, I can sit back and just see my portfolio just sitting flat instead of having to go, oh shit, we're down. Like, not that really necessarily matters like in the short term, but look at it or be like, oh my God, I got to look at this or check this. Like, no, I'll just be sitting back and letting it play out. So that's the plan. Thanks so much for watching, guys. I will see you in a future video or stream. Thumbs up button on the way out. Peace.